$1.8 billion. That's what IonQ paid this year to acquire chipmaker Skywater, and it's as good a place as any to start the number that defined this whole week in quantum computing. Today on Quickly Quantum, the week that was, where IBM staked a claim to a whole new quantum advantage era, IonQ, D-Wave, and Xanadu all reported blockbuster money moving in very different directions, and governments from Washington to Shanghai raced to fund and float this industry before anyone's fully sure it works at scale. This is the weekly recap, so we're doing it a little differently. Quick returns to what you've already heard this week, and fuller first looks at what slipped through the cracks. Welcome back to Quickly Quantum, your daily brief on the quantum frontier. It's Saturday, August 8th, 2026. Let's get into it. Let's start with the week's headline claim. IBM, working with the University of Chicago, plus supporting results from CUBA and Algorithmic, put out 3 papers arguing quantum hardware has crossed into what they're calling the advantage era, meaning a quantum computer doing something a classical supercomputer genuinely can't touch, and doing it verifiably. We flagged this as the single biggest storyline of the week, and it set the tone for the hardware and earnings stories that followed. But not everyone's buying the branding. On X, at InfoSec, who runs a quantum security firm called Applied Quantum, dug into the actual papers, writing, quote, IBM declared the quantum advantage era with 3 papers. The papers make materially different claims. The UChicago paper develops a quantum advantage protocol and backs it with a device-dependent fidelity certificate. That is a real contribution, but the certificate measures the Clifford reference state, not the hard-doped circuit directly. End quote. His read, a real contribution, dressed up in bigger messaging than the individual results support. That lines up with where we landed on IBM a couple weeks back. The company needs quantum to be the answer to its stock story, and whether the field or the market is fully buying the era framing is still very much open. IonQ's earnings anchored the week's "Quantum Stocks Are For Real" narrative, and we covered the headline earlier this week. Record quarter, revenue of $80.1 million, up 287% year over year, with full-year guidance raised to $280 million to $290 million. That came right after IonQ closed its $1.8 billion acquisition of chipmaker Skywater, which the company says makes it the first vertically integrated, full-stack quantum platform, machines and chips under one roof. Here's the twist worth sitting with. Even with that beat and raise, the market's reaction was more skeptical than the headline numbers suggested. On X, at Gene Chan, ran the math on Skywater's own numbers and estimated the deal alone could push IonQ's run rate past $800 million this year, with $1 billion in revenue plausible next year as the low end. At Quantum_Nyang made a similar point, quoting the numbers directly. Quote, here's the part the tape missed. That raise excludes any Skywater revenue. The $1.8 billion foundry isn't in the numbers yet. It's pure upside on top of an already organic beat. End quote. The market so far isn't fully agreeing with either of them. D-Wave gave us 2 stories in one this week, and we covered both. On the science side, D-Wave published peer-reviewed Nature results on a 2-qubit entanglement gate for its dual-rail erasure architecture, a design built to catch errors the moment they happen rather than fix them afterward. On X, venture investor at the Real Weinberg summed up the significance, writing, quote, D-Wave just published a Nature paper on an entangling gate for dual-rail erasure qubits. Simulations show logical error rates could fall up to 10x. Error correction, not raw qubit count, is still the real scoreboard in quantum computing. End quote. On the business side, though, it's messier. Revenue held flat at $3.1 million, but bookings for the first half exploded 1,120% to $35.5 million, largely on the strength of one $20 million system sale to Florida Atlantic University. The catch: operating losses ballooned from $26.5 million to $53.3 million. Operating costs jumped 93%, and gross margins slipped from 63.8% down to 55.4%. Real hardware progress, no question, but a backlog riding on one big customer isn't the same thing as a healthy business. Underneath all the earnings noise was a thread we've been tracking all week: error correction. A cluster of results landed almost simultaneously. IonQ demonstrating break-even performance with QLDPC codes, quantum low-density parity check codes that promise to protect qubits with far less overhead than older methods, plus toric code work from Atom Computing, a 256 logical qubit roadmap from Q-Era, and new Mitten QLDPC codes out of Caltech and Oratomic. Taken together, these pushed forward the industry's projected timelines for a CRQC, a cryptographically relevant quantum computer, one powerful enough to actually break RSA 2048 encryption. That's the through line connecting basically every hardware story this week, and it's exactly why the post-quantum cryptography migration problem keeps getting more urgent, not less, for anyone storing sensitive data for the long haul. The honest caveat holds, though. These are simulated or small-scale demonstrations, not full fault-tolerant machines running at cryptographic scale, and the timelines remain projections, not certainties. But the direction of travel hasn't changed all week. It's forward, and it's faster than it was a month ago. Here's one that flew under the radar, even though IonQ was already all over the headlines this week. Buried in the earnings release was a detail we didn't get to. That break-even QLDPC error correction result I just mentioned actually came from IonQ itself, a meaningful marker on the road to fault tolerance, showing the company correcting errors faster than they accumulate, at least in this early demonstration. The bigger surprise for me was somewhere else entirely. IonQ's space division. A unit called Capella, a synthetic aperture radar satellite company, meaning radar imaging that can see through clouds and darkness, which IonQ picked up through acquisition, won a $25.6 million contract with the NRO for radar imagery. Here's the honest caveat, worth being blunt about. That's a Capella win, not a quantum computing win. IonQ didn't sell a quantum computer to the NRO. It sold satellite imagery from a company it happens to own. And yet it's folding this into the same IonQ wins big in national security narrative as its quantum contracts. Not dishonest exactly, but worth noticing how a quantum computing company's win column now includes things that have nothing to do with quantum computers. It does tell you something about the strategy, though. Between Skywater's chip manufacturing, Capella's satellites, and the core trapped ion hardware, IonQ is building a diversified national security and semiconductor operation with quantum computing as the anchor, not the whole building. Whether that's a hedge against quantum taking longer than promised or genuine synergy, I don't think even IonQ has fully answered yet. Either way, it's a strategic hedge, and it's worth watching whether investors eventually start pricing IonQ less like a pure quantum bet and more like a diversified national security contractor that happens to also build quantum computers. Here's another one that deserved more airtime than it got this week. A Shanghai-based photonic quantum computing company called Turing-Q entered IPO preparation with the Shanghai branch of China's securities regulator, with Guotai Haitong Securities sponsoring the listing. If it goes through, Turing-Q would become China's first publicly listed quantum computing company, a real marker in a story we've been tracking, which is China pushing its quantum sector out of state and venture funding and into public capital markets. Global Times, China's state-run English-language paper, covered the filing directly, writing that it's, quote, intensifying competition to become China's first listed quantum computing firm and highlighting a broader rush by Chinese hard tech companies to tap public markets. That's the framing you'd expect from state media, and it's not wrong about the direction of travel. But here's the number that stopped me. Turing-Q's own filing lists registered capital of just 1.92 million yuan, about $282,000. Compare that to the company's reported valuation of around $1 billion, and you get a sense of just how early stage this business still is underneath the IPO ambition. Registered capital isn't the same thing as revenue or assets, but that's still a striking gap between the paperwork and the pitch, a pattern we've seen in more than one quantum SPAC and IPO story this year. Sky-high valuations built on years-out roadmaps, dressed in the language of a company ready for public markets today. Turing-Q might genuinely have the photonic technology to back it up eventually, but this filing is evidence for the first quantum IPO headline, not really for the commercially mature quantum company claim, and this week gave us the former, not the latter. And while we're catching up on stories that got squeezed out by earnings season, Xanadu, the photonic quantum computing company, meaning they build their machines out of light rather than superconducting circuits or trapped ions, raised $67.2 million this week through what's called a synthetic at-the-market facility with Yorkville Advisors, essentially a mechanism for selling shares gradually into the market rather than in one big splashy round, ending the quarter with $312.8 million in cash. On the technical side, the company also reported progress reducing edge coupling loss on its photonic chips, the light leaking out where it transfers between chip and fiber, one of the core engineering headaches in scaling a photonic quantum computer. plus growing adoption of Penny Lane, its open-source quantum programming software that's become widely used across the field regardless of whose hardware you're running on. Now, the reality check. This is dilutive capital markets financing, not new revenue. Xanadu brought in just $1.5 million for the quarter against a net loss of $42.1 million. That's a familiar shape this week. Real cash in the bank, real technical progress, and a business model still years from paying for itself, right alongside the earnings we already covered this week from IonQ, D-Wave, and Rigetti. The industry is getting very good at raising money and hitting technical milestones, and still very early at generating revenue that matches the burn. That gap is the story of this entire week, honestly, just told through a different company's balance sheet each time. Quick recap on one we flagged midweek. Pasqal's SPAC merger with Blyckroder Acquisition Corp. 2 officially cleared SEC review, with an extraordinary shareholder meeting for the combination scheduled for August 25th, the vote that would take the neutral atom quantum computing company public. This adds Pasqal to a growing wave of quantum SPAC listings this year, alongside Xanadu and others, all choosing the SPAC route to public markets instead of a traditional IPO. Worth remembering the caveat we raised then, because it hasn't gone away. SPAC mergers for pre-revenue quantum hardware firms have drawn real scrutiny this year, given how volatile the aftermarket performance has been for comparable deals. Getting SEC sign-off is a procedural milestone, not a verdict on whether the market will actually reward the stock once trading starts. It's a small piece of news on its own, but stacked against Xanadu's raise and TuringQ's IPO filing this week, it's another data point in the same story. Quantum hardware companies are increasingly turning to public markets for capital before their revenue lines have caught up to their ambitions. We'll know more after the 25th. Last story of the week, and it's a policy one worth a real look. There's bipartisan momentum building in Congress to meaningfully expand federal quantum computing investment. The House is expected to debate defense legislation that would raise annual military quantum spending 68%, up to $567 million, with a parallel funding push happening in the Senate. This slots directly into the U.S.-China policy arc we've been following. Naval Research Lab priorities, export controls, DARPA's manufacturing push, and it's Washington's clearest signal yet that lawmakers on both sides see quantum computing as a national security race they can't afford to lose. But here's the tension I can't get past, and it's the same one running through basically every story tonight. While Congress is talking about pouring more public money into quantum, the market's telling a different story. Shares of pure-play quantum companies, D-Wave, Inflection, and Rigetti among them, have fallen sharply since the start of the year as investor enthusiasm has cooled, even as bookings and technical milestones keep piling up, like we heard from D-Wave earlier. So you've got Washington leaning in harder on quantum funding at almost the exact moment private investors are leaning back. That's not necessarily a contradiction. Government money often shows up early, ahead of markets, precisely because national security payoffs don't have to clear a quarterly earnings bar. But it does mean the loudest bullish voice on quantum computing this week wasn't a CEO or an investor. It was Congress. And whether public dollars can carry this industry through the gap until private markets regain their nerve is, I think, the real open question heading into next week. So here's the belief this week actually challenged, that if a real quantum advantage era were arriving, the stock market would be the first to know. It wasn't. IonQ beat its own guidance and fell anyway. D-Wave's bookings exploded right alongside its losses, and by the end of the week, the loudest bullish voice on quantum wasn't a CEO, it was Congress. If any of that grabbed you, follow or subscribe wherever you're listening so tomorrow's episode shows up automatically. And if you've got a colleague who still thinks quantum computing is science fiction, this is a good week to send them this one. This has been Quickly Quantum, an AI-voiced podcast created and built by a real human using today's cutting-edge technology. Nothing you heard on this show is financial advice. I'm Brian Lampert, and I'll catch you all tomorrow. Take care.